You've got an economy in Europe which is, for the most part, not grown as rapidly as the US. You've got a lot of competition. Certainly on the continent, there is a excess of retail banking capabilities, unlike the US. That consolidation has not yet happened. QE is a particular worry. Low interest rates take away profitability. And then, of course, you've got all the new regulations. So that's a powerful combination of headwinds. But frankly, like all things, it will ebb, and the sector will recover. China, where I'm sure you're going to have follow-on questions as well. Yes, there's been some turbulence, very significant equity market volatility, but not a demonstrable wealth effect from that onto real growth numbers. I would still say Chinese numbers still look more or less in line with where they would have been. India actually looks better than it has at any point in the last 12 months. The rest of emerging markets are a worry. Combination of a slightly slowing China, plunging commodity prices, flow of funds out of EM back into the US means that for certain parts of ex-Japan, ex-China, ex-India, Asia, we could have some bad news.
Does that mean Malaysia or Indonesia?
I'm not going to get specific beyond that.
It's quite a small category, actually, if you take
well,
away China.
It's actually a big part of the world's population, John, and a reasonable part of the GDP. And there are some concerns. And it's not just that part of Asia. Brazil, Russia, South Africa, Turkey. There are a number of countries where the combination of much lower commodity prices and the outflow of funds will represent a challenge.
How far do you think that emerging markets sort of worry can go? Which are the particular bits which unnerve you?
Not as bad as, I'll go out on a limb and say, not as bad as the Asian crisis in the late 1990s. Fundamentally different dynamics. Foreign exchange reserves look a lot better. Sovereign indebtedness a lot lower. Look towards emerging market corporates if you really want an area of concern. I think it's a confluence of three factors, John. We've touched on one, which is QE, which is the single most important thing for everyone in this room, and I dare say anyone in this audience. Forget everything else, as we saw on Friday. US growth is going to be slower, equity markets rally. It's all about interest rates, and has been for the last many years. That has produced a very rapid increase in the price of risk assets. Secondly, we should decompose who owns these risk assets. And I'll think you'll find a pretty dramatic shift in the pattern of ownership post-crisis. Banks own far fewer assets. They should, and they do. 40% fewer for the big banks of the world. Retail has been pushed out of deposits and savings, up that risk curve, and that manifests itself in a dramatic jump in ETFs, 3 times, closed-end bond funds, big investments in investment-grade debt, high yield, and so on. And of course, the shadow banking sector has grown by 20-25%. That shift in ownership means the way information now hits markets and the way it's processed, inevitably, will be different. I think regulators have done what they needed to do. I've said this already. Banks needed to be regulated. Business models needed to be tightened. I'm just pointing out a combination of factors which can represent risk and will certainly represent volatility, some of which we've seen. By the way, I don't want to be overly alarmist. The fundamental picture for credit looks good. How can it not? With interest rates near zero, these companies have had access to funds for a long period of time at very low levels. We've just said, and I saw you nodding, that global growth is not a worry. So fundamentally, credit markets appear fine. The microstructure of credit and market mechanisms, I think, do need watching. Proudest of the transformation which has taken place at the bank. I joined the bank in June 1995. It was a very prestigious, but predominantly European, some would say predominantly German institution in 1995, and a scant decade and a half later, it was competing with the best and the brightest in the world in Asia, in the US, and was widely recognized as being a true global player. That's a largely organic transformation, the likes of which I would challenge you to put forward. So everyone at Deutsche Bank is very proud of what it took to achieve that. The regret, I suppose, would be not transferring that and not realizing that in the form of investor value. And there's a whole variety of reasons why that's taken place, and certainly Deutsche is not the only institution, the banking industry overall.